Today I want to give you a high-level overview of the Cloak DEX. The Cloak DEX is part of the Cloak app bundle that will launch together with the Cloak protocol. And it comes with a lot of pretty unique features. One of the most interesting things probably, besides the fact that you can use it with the Cloak wallet, which allows you to use the DEX completely anonymously, it also combines different market types that are well known in the crypto space. For example, people are familiar with limit order book exchanges, but there are also constant product market makers, concentrated liquidity market makers. And traditionally, these markets are usually separated from each other, right? So you know Uniswap, which has traditional constant product market makers, but it also has a separate market for concentrated liquidity. The cool thing about this DEX is that it combines all these instruments into one market. So the liquidity is not split anymore across different markets, but is being united in one and the same market, essentially. So I will just go over all the features. First of all, you have two different interfaces. So for people that might feel a little bit overwhelmed looking at this advanced interface, there's a simple interface that just allows you to swap tokens without, any of the other complex instruments. So those are essentially just market orders that you fire. Should be very familiar to most users. But then again, if you are a liquidity provider, a market maker yourself, this advanced interface will offer you all the instruments that you could possibly ask for. So let's start with the limit orders. This is something that probably everyone knows. Centralized exchanges are, and also in traditional finance, stock exchanges, they're all based on limit order books. So I'm just gonna go over all the different instruments one by one, and I will also show how to use the DEX using the Cloak wallet and using your Anchor wallet. Let's maybe start with the simple interface. So this is already fully functional, also with the Cloak wallet. By the time you watch this video, we might have enabled all the features already for the Cloak wallet. Currently, at launch, only some of the features are not yet unlocked for the Cloak wallet. There's still some integration work to be done. But if you check out the simple interface, this is already fully functional with both Anchor wallet and the Cloak wallet. So let's do this. Let's start with the Cloak wallet. So we connect our wallet. Again, you see the balance request here. I currently have 1,600 Cloak tokens and some Telos tokens here. So let's just say we're going to swap 10 Cloak tokens for some Telos. It will show you exactly the amount of Telos that you would receive. Of course, only if there's no other trade happening in between. It will show you the slippage here that will be caused, and you can see even though we're just swapping 10 Cloak tokens, the liquidity is so low on this testnet market here that it would lead to 4% slippage, but it doesn't matter, just for the sake of demonstration now. So trade was already executed. As you can see, this was just a market order which gets executed right away. And the cool thing is about these EOSIO chains like Telos, because of the frequent block production, you literally have 2 blocks per second. Your transaction is going to be included into a block almost immediately. And also, thanks to instant finality on Telos, it's already final. The moment you see the chart here, your transaction is already irreversible included into a block. And yeah, so this is really just a simple swap interface. And of course, you can again use it also using your Telos account. I'm gonna disconnect the Cloak wallet now and reconnect with the Anchor wallet to be able to show all the other features. So we do that. We go to the advanced interface. All right, you can see this is the exact same market as before, but now we're being we see a lot more information. So for example, here on the left side you have the order book, and because it's a hybrid of order book and AMMs, automated market makers, you essentially have three markets combined into one. So you have the limit order book, and then you have two liquidity pools. One liquidity pool is for constant product liquidity. This is when you provide liquidity across the whole price range. And then there's concentrated liquidity, where you can limit the price range in which you want to provide liquidity. So I'm going to go through these things, and I know that this is very technical. Not everyone is maybe familiar with this, but again, concentrated liquidity is a very new concept that was introduced by Uniswap version 3. Constant product liquidity is at this point already well known. It's something new that actually really just came with blockchain. And yeah, we're gonna go through these things. The most interesting thing about this hybrid is that the pool always sits between the two sides of the order book, right? So in the limit order book, you always have discrete price levels at which you have the limit orders. You can see that here. You have concrete price levels at which these orders are being placed. But liquidity pools with AMMs, they have a continuous price range, right? So you have slippage with every single order that you execute, and that moves the price. Whereas in order books, right, if you match an order against a row, you don't have any slippage at all until this order is matched. So this is a complete new concept. Again, I'm not aware of any DEX or even a centralized exchange that implements this. So it is somewhat innovative, right? The whole concept, which is why, in addition to the limit orders here in the order book, you have these arrows that indicate liquidity that is available between these two limit order book rows, right? Because if your order isn't matched against an order book row, it is matched against the pool, because the pool would give you a better price until the slippage hits into the next order book row. Okay, so I'm gonna demonstrate this, or let's go over this step by step to not overwhelm you. So currently we have the current market price here is at 0.11, right? And then you see the next sell order is at 0.2. The next buy order below that price is at 0.09. So if we execute a market order now, we would move the price, right? Either up or down, depending on the direction that we trade. So let me just show this here. Let's say we buy. Okay, a buy order will move the price up. And you can see we have liquidity left here in the pool. And by the way, those are two pools combined, right? It's the concentrated liquidity pool and the constant product liquidity pool. And both of them currently provide this amount of liquidity before the price would hit into the next order book row. So if we were to trade around 100 cloak, we would consume this remaining liquidity and get closer to this limit order book row. So let's just do this. Let's say we buy cloak for 15 telos. And you can see how much slippage this would generate, because the liquidity is so low on this test market. Sign, execute it. And you can see how far the price moved, right? And you can see we're now at 0.18. So we got closer to the 0.2, which is why the liquidity here, the remaining liquidity of the pool, got a lot thinner, right? You remember there were about 18 telos liquidity left. We traded 15 telos worth of cloak, which almost made the price hit into the next row. Let's execute another market order, this time 5 telos, which now should consume the remaining pool liquidity and let the price hit into the next order book row. Let's do this. and you can see the pool liquidity has disappeared, and we also almost consumed the whole order book row. And here in the latest deals, you can see every single order match is basically recorded. So basically every single tick that is produced, price tick. The first trade was only matched against the pool. The second trade was matched against the remaining pool liquidity, but also consumed a little bit of the book liquidity. So this is what these letters here indicate. And you can see how now the buy liquidity below the current market price has increased. Why? Because the liquidity between this order book row, which didn't change, and the current market price is now a lot bigger, right? Because we have a lot more slippage until we hit into this buy row on the lower end. All right, so this is market orders, limit orders. It should be fairly familiar to anyone who has ever traded on a centralized exchange or even a DEX. Another cool thing about this DEX is that it even supports stop orders. So we have stop orders and stop limit orders. By the time you watch this video, this should also be fully functional, at least for the use with Anchor Wallet. What makes this tricky on the DEX is that stop orders are essentially market orders that get fired when the price hits a certain level, right? Your stop price. And the way this works on centralized exchanges is that you create a stop order and then your broker will fire it for you, right? You can turn off your laptop, can log out of your exchange, and you can be assured that the stop order will get triggered. But because this is a decentralized exchange where there is no middleman anymore between you and the blockchain, so between you and the market essentially, the stop order would only get triggered by the user interface itself. So if you want to use stop orders, you need to make sure that your web application remains open, because no one can trigger the stop order for you other than your own trading interface, okay? Because it is a decentralized exchange and because there is no broker that is sitting in between you and the market. So this is probably one of the biggest differences between stop orders on a DEX and stop orders on a centralized exchange, right? Same, of course, for the stop limit orders. A stop limit order, as the name already says, right? It gets triggered by a stop price, but then it turns into a limit order. So the normal stop order turns into a market order. The stop limit order turns into a limit order. The next interface is the constant product liquidity interface. And again, this should look fairly familiar to anyone who has ever used Uniswap version 1 or 2, or exchanges like PancakeSwap. They all work the same way. They don't come with a limit order book, so it's a lot simpler. All they have is really just this constant product liquidity interface. And so the way it works is that you always have to provide both sides of the market. Depending on the current market price, will determine how much of each side you need to provide. And you will receive pool shares that are fungible tokens themselves, because the liquidity is provided across the entire price range. Every share of this pool has a constant value basically and is fungible by nature. So yeah, again, I'm not going to go into all the details. This should be a familiar concept to anyone who has ever used a liquidity pool. You provide liquidity, you receive a certain amount of shares in return, and then of course you can withdraw liquidity at any time by just burning the shares essentially, and you receive the tokens that you provided back, plus all the interest, right, that has been accumulated during the time that you provided it. And of course, there's impermanent loss, right, depending on the price at which you provided liquidity and depending on the price at which you withdraw the liquidity again, you might have more or less tokens of each side. And now the most modern feature is, of course, a concentrated liquidity. This has been introduced by Uniswap. I don't remember, just a few years ago, I guess. And the cool thing about that is that you can determine, or you can set price boundaries in which you want to provide your liquidity. So it's very similar to constant product liquidity in that you always provide both sides of the pool and you have a continuous price range, but you can limit the price. You can set a lower price boundary, the higher price boundary, and depending on the price boundaries, you might either supply only one token, one side of liquidity, or both tokens. And these liquidity positions are unique. I can just demonstrate that real quick. So for example, if we would provide liquidity at the current price and we set the price boundaries, the lower price boundary lower than the current market price and the upper price boundary higher than the current market price, we would provide both sides the exact same way that we would do it with constant product liquidity, right? If we were to change the price boundaries to, for example, if the lower price boundary would be above the current market price, for example, at 0.22, and the upper price boundary at 0.25, for example, we would only provide the base currency, right? Because we're in the upper end. And of course, the same is true if we would go below the current price with both ranges. So for example, 0.09 and 0.1, for example, we would only provide the quote currency, right? So again, this should be fairly familiar to anyone who has ever used Uniswap version 3. And yeah, I'm not going to go into any more detail there. If you open a position, I want to show this real quick. So for example, using the lower price boundary, let's just put it at 0.15 and the upper one at 0.25, which is in the active price range. We would provide both sides. Let's do this. And your concentrated liquidity positions are shown here below. So we just opened this position, and you can see because it's currently in the active price range, it is labeled active, and any trade that now takes place would earn fees. And maybe we also show that real quick. So let's just execute a market order. I'm just gonna sell, I don't know, 10 cloak. Execute that. And if we check out, you can now see that that there is a small fee amount that has just been generated because our concentrated liquidity position was inside the active price range, and it has accumulated 0.11 cloak tokens in fees, which you can claim anytime. And of course, when you close your position, you also claim your fees. And yeah, that would be it about concentrated liquidity. Okay, on the bottom here, once you connect your wallet, what it will also show you is, of course, your open orders. With this account, I've already created most of the orders here that are in the order book that I showed earlier. Again, it's just testnet, right? To make it look nice, we just used this account and added a bunch of limit orders into the order book. And again, if you connect your wallet, they are shown here below. It shows you exactly, the type of order, the current price, current open amount, the dealt amount, the progress, and of course the timestamp. And again, this is all fully on chain. This DEX doesn't rely on any off-chain infrastructure. And this is the cool thing about these EOSIO chains. You can build a DEX like this fully on-chain. And so you have all your open orders below. And of course, it will also show you the trading history. So for example, with this account, the only trade that we executed was the sell order from earlier. And yeah, again, it shows you exactly at what price it was executed, the amount that it was traded, and of course, the time at which it took place. And the market, of course, yeah. So we have only, currently on this DEX, it's on a tester, we only have this one market. But yeah, it will always show you all the symbols here on which either the trades took place or on which you have the currently open orders. And yeah, that's all for this video. I don't want to make it too long. We're gonna publish more videos about the DEX also as we unlock more and more features for Cloak. Again, with the Anchor wallet, this DEX is already fully functional. So you can use limit orders, market orders, stop orders, and also all the liquidity instruments. They're all available. And yeah, I hope it was informative. If you have any questions, always don't hesitate to join our Telegram channel. Ask it there. We're there 24 hours to answer your questions. And yeah, I hope it was informative and see you in the next video.